Good morning, everyone. Welcome to this session. It's been a while, Dan, since we were live last, and sorry for that. We've been kind of busy last few months, but glad to have you back, as always. Welcome.
Oh, hi, everyone. I'm happy to be back, and thankfully with Fabio, we're going to bring back some of the nice content we have, and we've been very busy, but this is to all of your profit. So happy to be here.
Yeah, and today, Dan, we just take a look at some of the things that we can do, some of the new things as well, and how can you build kind of like a strategies with options. So yeah, let me know how we want to start. We can start with the screeners, and then we can go into look at some tickers, and then we can also look at the market as we move on.
Yeah.
As always, guys, send us a comment. If you have any questions, just post it and we'll reply live. So we are here for you guys.
Yeah, thanks, Fabio. So this is a good. So as a refresher, we won't dive into the absolute Greeks and basics and other stuff because we have shown you a lot of basic stuff. We've shown a lot of advanced strategies, and we will look over some running trades. We talked about risk management, and this is a good point, maybe when to take profits. But some indicators like the market can shift easily, so sometimes it's good to manage your risk. So we will look at some trades and what can you learn, what could you do, do you do anything, and how MenthorQ can help you there. So, but the first thing is to just grasp the changes which have happened in the last couple of weeks and months. If you remember, in the beginning, we had the Discord, we had the bot, and we had the was the web page, and this has really grown into a full-time, basically trading platform here, basically where you can actually trade, but you get all the data you need for trading, which is more important because setting up a good trade needs good data, and you got everything at your fingertips here. So one of the easiest things and always demanded by users, and it's understandable, you don't have much time, you don't want to spend too much time, and especially with options, you can intraday trade them, which is a nice thing. You will do probably momentum trading, but options, as we said and shown you a couple of times, they have more dimensions. They have the price, they have the volatility, and the factor of time, and that's why they are different from futures, which is a different kind of animal. Speaking of, and basically with options, you can set up all kinds of different trades. So, which I love here about the screeners, it's that it gives you inflection points, and then you can look for confluence. You will go into the equities page, and you will see everything there, all the data together. But the question is, where do you start? Yes, the easiest thing is you could trade the indexes, which is a very good starting point because there is very low slippage. And the other thing is the premium good? I've been talking about some volatility metrics. I'm showing you volatility metrics lately, which basically also makes indexes attractive, but we will talk about this further down the line from July on when we do our basic to more advanced full academy lessons. But today I want to let you focus on how you can start basically finding good trades. And we had shown you good trades from the gamma levels. We have shown you good trades from the volatility levels. And in the last couple of weeks, MenthorQ introduced their Q scores, which makes things even easier. And in the beginning, you would see them. I will show this just for a second, Fabio. You can see this Q scores here. Basically, like everybody's favorite stock, NVIDIA. You can see them right away here on the top. Let's forget about everything else, like here with the add command, you can take out things or add things. But what I want is that you focus here, that you have everything here you need. Everything you need here for a proper trade is here. You have the expected move, all that stuff. So if someone is knowledgeable or is has traded a lot, he or she could really easily set up a trade just with this, and maybe look at the options chain. This makes this thing so interesting. So that's why MenthorQ went further and said, okay, if we have these things there, they help people like see with one look, where is the equity standing? What is it doing? How is it moving? So in the end, it helps you get a grasp very fast what you should do if you are in a trade or if you want to get into a trade. But the thing is, if you want to check your trades, or especially if you want to start trading, you need an inflection point. So what we did with the gamma levels was we can see where stocks are very close to a gamma level. They are called walls, or you can also talk about them as reaction zones where something will happen. I trade a lot based on the DAX, which is the opposite of the GAX, but they are together like delta and gamma. Fabio has explained that various times, but we don't want to deep dive into that. The thing is, what you see here is very simple. Is the most important thing is that you have the option score, you have the volatility score, the momentum score, and seasonality score. So these are the scores you will see in the scorecard of your equity or your index. But MenthorQ goes further. It will look for low option score. So there could be a reason. Like if you want to have a trade with a bias, basically, and you have a bias, you want to go bullish because you saw some unusual volume here in one of the screeners, you would check the option score. Or if you have equities and you manage them, maybe if they have a low option score, it's something which might drag on. So it's something you might avoid. Or it could be the inflection point or with a bearish bias or a bearish trade. The same goes with volatility. So if you have high volatility, this is good. We learned for selling, basically for selling premium, low volatility. We expect that everything goes back, drifts towards the middle. If you think of the bell curve like this, if we have high volatility on the outside, it should go in. If we have low volatility, it should expand at some point. We have inflection points like earnings and other stuff, things we've talked about. So if you want to set up debit strategies, maybe this is something to look at. So momentum score is something, if I'm in a trade and suddenly my equity turns up in this low momentum score, I would really think maybe if I'm looking for momentum, is something to get out. So basically, high momentum is the place to go if you believe, because momentum normally higher highs bring more highs. So, and higher lows bring more highs. In these technical terms, I don't use them that much, but momentum, if you chase momentum, and a lot of people do, then this is the right place, because you can expect that this momentum will hold on. You should look at other factors too, like how are the GAX levels moving, what is option flow telling you, but this is something which plays a role. And you have seasonality. Seasonality can be very important if you grasp what the equity does underneath. But in the end, if you want to trade and you don't want to deep dive into that, then this is a very easy way of understanding is this a season where this equity is, let's say, in a very bearish mode or in very bullish mode, or is there a lot of move at all? So this is interesting, because if you have a bearish or a bullish bias, then most probably you would skew if you have a non-directional trade, you would skew it, or you would go just into one direction. If the seasonality is low, but volatility is high, the option score isn't that bad. The momentum score is also okay. It's in between. It's not here and it's not here. What would be the trade? The trade would be a non-directional trade profiting from theta, because you have high volatility, so you get a lot of premium, but seasonality isn't giving you indication that we're going to break out down and we're going to break out. So the same can be said about these ones here, which is they are very nice. Sometimes you see moves happening slowly, like normally some not the whales automatically, but basically the big money will start buying or selling something into it slowly. You see the drips if you look at the options chain, or you look regularly at options flow, or you just look very simply how the gamma levels are moving, and which derive from the open interest. And you can see that, let's say you have a equity which has a low or middle low option score, and you see it creeping up. And something is about to happen, which is a good inflection point. So if I see something which is increasing, but it's not here already, I would check it's also momentum is starting to rise. Then I would definitely check the options flow screener here you have, and take a look at the options chain and see what happened the last days. I will look at the other metrics we have. I will look at the 5-day swing model, for example. I will look at the main chart which MenthorQ offers. We will look into all these metrics later, and something is about to happen. So let's say it's creeping up, and let's say we have a move to the upside, and it's going close to the call wall. We'll definitely check the DAX, and if there's a lot of DAX concentration there, this wall is something which was probably, it is attracting. It will go there, and if it breaks, then we'll get proper momentum. So this is a nice breakout trade. So from these alone, you can build very interesting trades. So I don't know, Fabio, if there are any questions right now, or hints to what people want to hear.
There's no question so far. I think what's also interesting, Dan, and I can share my screen 1 second. It's basically, so if we go on the Q score, we have kind of like 4 screeners for every score, which is the highest, the lowest, and then the most interesting one, I think, is the highest change. So the highest increase and the highest decrease. So the highest increase means that compared to the previous days, if we look at the data from yesterday compared to the day before, which one is the asset that saw the biggest increase in option score? So that means that if we look at, let's take Netflix, compared to the previous day, we saw an increase of 3 in their option score. So then you can go here and you can quickly see what's going on with Netflix. We are in a positive gamma. We have a neutral option score. But then if we scroll down, what's really interesting, you can see this kind of like move. So it was very, very bearish 2 days ago, and now we're back kind of like in a bullish territory. So understanding what happens here, and of course, you see as the option score went bearish, the trend started to fade. Now we're back into like a neutral territory, and then we can see what's going to happen to Netflix now in the next few days, for example. But it all comes from one of the screeners that we saw here. And the other beauty thing, Dan, is that you can also go back in time. So if you wanted to look at the history, so let's say we're going back to Monday. What was the assets on Monday? So we had Costco, we had Tesla, and I think we also did some interesting back testing here. So we took the data from Monday, which is what you saw there, and we basically look at the current performance. So as of yesterday, what was the performance of these assets that came out of the screener on Monday? So we saw that Tesla, for example, was 14% up. We had Target, I think now is negative, but we were up 5 or 6% on Tuesday, and there you go. So you see it here, very, very easy. And I don't know if
guys, you see.
Yeah,
no, this is very interesting because everyone is looking for simple solutions, which is fairly absolutely understandable. And MenthorQ, they develop every couple of weeks more ways of compressing these data clusters and all this stuff into even easier models. Like we were looking at the swing day model a lot, and we gathered a lot of trades, and now you have these trades. Like you can take weekly trades. Some people have followed my expected move breakout trades, which they're not that easy to comprise, not that easy to understand, to factor in, but this doesn't matter. If you want to have your own breakout trades and you don't want to do them only on Monday, Tuesday, like I do them, and scale them up, you can do them here daily, because like Fabio showed you, you see a change in the option score. And the other thing, what you could do, what I would do is, let's say you saw this change in Costco, you saw this change in Tesla. The next thing is take a look at what happened to the spiders, to the QQQs, or the futures. Doesn't matter. And is there a confluence? And this is so important. Is there some confluence there? Then you can look at the sector, like find the sector ETFs here. So if there is a confluence in the move, then this ship should sail even more. So basically, this is really, really great stuff. And if you want to dig deeper, then you can definitely, like here, you can see the at the money term structure, which is something I always look at. You can see the change in the GAX and in the DAX, which is lovely, because you have the intraday change, and you have 3 ways of looking at the put call ratio, basically. And if you go a bit higher, Fabio, we can see that. Wait a minute, where was it? Yeah, we're coming closer. One more up. Oh, maybe down, one down, sorry. It always stops and then it starts again. I don't know, maybe it's my PC. Yeah, here we are, the skew. Basically, this is something I always look at. And what can you see from the skew? Where is the trade? Yes, if the beef between POTUS and Elon would have gone on longer, we would have seen a bit of a different skew. But MenthorQ really has nailed it there, because you saw this candle, this red candle. It's not definitely the technical term, but if you look down and you see at this 1 month skew that at some point it was going down. Let's say you didn't catch it right in the beginning, but that was the inflection point for basically not risking everything, but for an upwards move, basically reading the skew. Look at the ODT skew, look at the 3-month skew, and see how things move. And the QQ and the MenthorQ scores help you there understand the stuff. So you see that the bias is changing. What does this tell you? That we have a shift. If you're not sure, you can play this non-directional. But if you're sure, you have a great trade here. How much was Tesla up? I think probably 14%. Imagine you would have played that even with just bull put spreads. No risk. We stay down. We sell credit. You would have been in super profit within a couple of days. If you had gone with a call, which I normally don't do, you would have maybe made your month's worth income. So this is so important. And the inflection point, we go back to what we said, the inflection point, Fabio showed it to you. It was the change in the score. Yes, if you're knowledgeable, if you know how to use all the data, you will go deep dive here and look at Tesla, look at the other stuff. But do you know that? Yes, you can read the news or follow stuff or look at curves and other stuff. But basically, if you ask me, yes, we all look at charts. It's more psychological stuff. That's why quant traders are so much more efficient than other traders. And this is the great thing which I love about these scores. It's that you just look at that and you get an idea, not a trade, not a ready trade, but it gives you an idea what can happen. And then you start digging deeper, and then you have your NAMA levels, you have your DEX positioning, which we have talked about, and then you can really, really, really build a trade, which is super, super easy. I don't know. This is at least how I see it, and I don't know. We can look at some of the scores now and maybe think about would that be a trade? How would I look at that trade, and how would I set that up? And then we can revisit some of the trades from last 2 weeks,
Yeah, I think
especially the earnings trades.
we have a question here. So from Simon, basically, like if you can go over like your step-by-step kind of process when you are like looking at the ticker. And again, this is not investment advice. This is just pure educational. We want to show you how to look at the data and then how to potentially look at implementing it. So I don't know, maybe Dan, if you want to go through like a past trade that you did and what was your thought process.
Yeah, we can do that. Basically, Fabio, we can do my trades, yes, but I think what is asked here is from scratch. So everyone trades differently. Everyone has different trades, and if you have looked at my trades, they have become more complex because I've seen that people demand them. Basically, I would suggest we start at what we showed, because it's something everyone can grasp. Let's take the Tesla trade, and what trade, because we have the data here. That's the thing. What trade would we have done? So if we go back, I don't know, should I share my screen or will you share your screen, Fabio?
I'm sharing your screen so we can see.
Okay, wonderful. Okay, so let's go. I think it was in the 1-day options increase, Fabio. So let's go back. We start from scratch. And I think you chose, I don't know which day did you choose, Monday? Was it Monday?
I went back to Monday. Yeah.
All right. Okay. Here we see Tesla. What do we see here? We are in a positive gamma condition, which is nice, which means for me, we will have a move, but we won't have this rapid, vicious moves, which are nice if you're short and it goes down, but these things are short-lived. So 2 things before we start talking about that. One, super advice, because this is no financial advice. We said that a couple of times, but we give you general risk advice. Everyone who risks too much is wiped out at some point. Period. That's the thing. You can be lucky 99 times out of 100 and 100. Like the first thing I always ask myself, if I will repeatedly do this trade, not talking about Monte Carlo simulations, but is this trade on the long run a winner if I want to repeat it? So in the end, yes, most of the time I try to do repetitive trades and things which make sense. So we saw Tesla here. What did we know about Tesla? We remember that Tesla was doing very well after POTUS was elected. It had some issues and it dropped like a stone because there was the bromance was ending. Okay, so the option score 1-day change from 3 to 4, which was somewhere in the middle, so it went up. Volatility is very low. Okay, what does this tell us? The volatility? No, sorry, it's 1. 1 is low, which tells us maybe to go for a debit. Like credit is when volatility is high, we prefer to sell credit. Momentum is low, so you can't expect that things will just like rush up, okay? Seasonality is also not that high. The IV rank is below 50. Implied volatility it's 63, which is not that bad, but we always have to put that into perspective. That's why we have IV rank and there's also the IV percentile and the NVRP, but we don't need to deep dive. We were asked how to basically build a trade here. So this just tells me that this equity, Tesla, which is a nice equity because it's liquid. That's why I like liquid. First thing I do here, again, I will go and even with these scores, the first thing I will do, I'm sorry I didn't do that, is I will rank them by market capital or market cap. And then I will try to see where the change is. You can do it differently, but this is what I do. And you see here, this is a super expensive company. So options should be liquid. I don't want to pay too much to the market makers, to the broker, and to anyone. I want to keep my money. I don't want to spend money on that. So basically, we are seeing option score is improving, which is super good. Volatility, we said that, and momentum. So most probably I would go for a debit strategy here or a non-directional strategy if I'm not sure if this beef is going on. But let's say we thought this thing is over and Tesla can go back to what it did, being a somehow volatile stock moving in between of the lines. So how? Okay, market is opening now. To everyone who has to tend there, then you're not having trades like I have, which already have their the max loss implemented, and I can really relax and look at the market in an hour, because the first hour of the market is normally the hour where retail traders lose part of their money and the pros come in an hour. So we can go on. I will open Tesla, and I will take a look at Tesla here, and we see the option score is high, which is nice. Again, all this stuff here, and then I will start to build my trade. The first thing is, which I will do, is I will look at the key levels just to get a grasp of it. The call resistance in general is 350, for a shorter term 325, put support 250, 300, the magical 300. So if I wanted to set up a very fast non-directional trade, I would look at these two, and then I would try to take a look at the 1D max. Then the next thing is, and this is my favorite, absolute favorite here, I would look at this thing here. I see, yeah, there's a change in the DAX, a bit concerning. And the question is, first of all, how long do I want to trade this out? Normally, I would be looking at trades above 30 days, so I would go to 47 days, but for the sake of it, everyone wants to have short trades. We don't know what's happening with Tesla. I don't want to risk too much. I would maybe take a trade till the end of the week. So we go again, sorry, back in time to Monday. Was my bad. Momentum was low, so we expect that momentum can only get better. So let's take a look here. So it shows us what we have in the end of the week. So let's say we would be trading till Friday, from Monday till Friday. So what would be my inflection points? My inflection points would be 350 is the high vol level. So if we pass that, my next target is the 315. So I would either wait for the 350 to break and then go into a debit spread, or if you really want that, a naked call or a risk reversal to the upside. That would be one of my trades. The other thing is, if I'm not that sure and I can't see where the direction is, then the easiest thing would be to sell the expected move, so roughly 30 points, and maybe set the break-even points somewhere in between the expected move and the call resistance and the put support. So already we have two trades. And if I said, okay, I know volatility is low, but still, I don't like paying up front. I don't like it. I believe in statistics. The bank always and casino always wins. I want to get my money first. Although volatility is telling me something else, it's just a couple of days trade. I want to be in credit. Okay, what would I do? I would sell around this put support here. And before I will do that, I would go, the next step, I would go here. I would go to the 5-day swing model to see what happened here. So the lower band is at 268, so 270. But for Friday, and this gives me hope, for Friday, the put support is here at 280. So I can be a bit more offensive and sell maybe the 280 to 270 or 280 to 275 if I want to make a $5 trade only. And this would be just a very simple credit spread. So these are the things. I could even make it more complex. I could make a diagonal out of it. We talked about that. So sell the short now and go out a week with a debit, pay a tiny debit, but you can adjust these things easier. So these are very simple setups to set up a trade. if I feel that a week is too little and I don't know what the market is bringing, the other thing, if I look here, could be go out in time, avoid earnings, but earnings were here around the corner. So maybe sell this or this here and try to factor the 21 days somewhere here, take off the trade. So I would for it and sell the 150 short as a strangle. So I have these two as a buffer inside, or I would skew into them, maybe the first and then the other. So even if Tesla moves in between of them, I don't care. We will see that on the trade I'm having on Dow in a couple of minutes. And I always look at the expected move because this gives me a rough guidance what the market expects. Normally, the core resistance put support are respected, but they also become magnets, which means that you suddenly find yourself, if you are in a non-directional trade, suddenly it's red, the trade is red, although on the long run, this will be respected. But this would be a very, very simple setup for a trade. What didn't I do? I didn't look at the term structure, things which I do. I didn't look at other stuff. We talked about seasonality, and if we look at seasonality, basically, it is super relaxed here. The seasonality, Tesla went a bit down here, but seasonality is not bothering me. What does this tell me? If I want to trade momentum, which is low, which I believe will catch up because I'm seeing the option score improving, and normally if option score improves, momentum is kicking in at some point, which it really did. I don't expect that much from seasonality, so that would be a good inflection point if premiums are good to maybe go non-directional. So these are very simple, basic approaches of setting up a trade. We could do this here in option strat, but the thing is I can't go back there in time to show you the prices, so I could only do from what I see now. But let's go back here and see if there are any further questions or if the question is answered. I just wanted to get a general insight how to proceed the trading process. Okay, I hope this answers that. If you have more questions, either shoot here or just tag me in the Discord, and we can go into depth. I explain a lot in the options section and in the effort in the other subsections.
Yeah.
Okay,
Yes.
Fabio. I don't know. Shall we go over some old trades and explain what happens and risk management, or
Sure, we can do that. Yeah.
should we do that?
Maybe
Okay.
10 minutes left or something, so we can go over that.
Okay, let's do this. I have here some trades here. So some people who follow that, these are just some few trades here in one of the accounts I have on option strat. I always do one contract, so just for the sake of it, I'm too lazy to calculate how much 2% of my whole thing would be. But this were breakout trades for the week. This thing is at 70%. Yesterday it was at 145. So this is due to the structure here, and you can see that we're going to be in profit if we stay at least above a certain below this 86.6, which is was probably going to happen. And like BA last week, I had some people like writing to me in private messages. They were like up 50% and Boeing, and suddenly they were seeing negative. We had opened that for $3 credit, and in the end, people made like 2,000% on that. So this will turn most probably a good winner, but I wanted to show some other trade. You see here two short strangles. A lot of people are afraid of short strangles. If you don't know what you're doing, yes, you should be, but they are less dangerous than risk reversals and other fancy stuff out there. So This thing here is down 40%. It was up like 10 or something. Now it's 40%. Why? Because we had a nice run up. Like we had a nice run up. When I opened that, we were right in the middle. We were somewhere here at 27 or something. And now we have breached the call. Do I look at that? Yes. Like I've explained here everything. This is my thesis. So when do I care about this? I start caring and doing something when my break-even point is breached. Why is that? Because if I would roll every time or adjust or take a loss, doesn't make sense. Like we just need a bit, this thing to dip a bit, and then we are back in profit. So the other thing is we have 36 days to go. I normally close around 20, 21 days. That's my normal thing. So we still have time. Plus, the market is turning a bit, and we have all these things here. But these are things which were set up when we opened the trade. So we have the GEX wallet 32. We have to take a look, and this is a good thing now. Let me see. We opened this trade. Let me see when we opened this trade. We opened this trade on May, and that's why I love MenthorQ. We go to Dow. You can have a watch list here, and then things are easier. Oh, I hope now it's gonna open. So we go back in time. We have a high option for low volatility, low momentum. So yes, was inclined, like I said, no, momentum will catch up with the option. Volatility was low, but I had some other metrics. So we had a 1.3 priced in for the day. But look at this. So we were seeing the put support. We were seeing this here. So I sold this out. So what do you see here? The 35, you see the 25, 31. So this is very helpful here because in between we might go up, but also we have some lower phases and also some lower phases here. And the expected move is 1 to 2. Most probably at some point we're going to drift back, and we go change now and go to today. And this is the thing what I want to show you. So seasonality is slightly negative. We were up now, so maybe we will go down. Option score is very high, but everything which goes high regresses to the middle at some point, and everything which is low comes back. Simple bell curve, basic mathematics. So what do I want to see? I want to see has anything changed here? Yes, something has changed here. We remember here we had a 25, now it's 31. This went up a bit, so we see more higher expected move. So volatility is picking up here a bit. So what does this mean? Am I afraid of this trade? No, because I still believe that the levels are going to be respected at that point. So what else would I be looking at? I would be looking at the multi-expire here. And we see here that if we look at this one here, 35, and this year, but, and this is in September, and this is here. So something is changing here. We're more moving to the upside, and we're seeing that the core resistance, which was 30, 32, 35, is moving up. So maybe if this, let's go back here. If it continues to rise and doesn't stop at 32, then what would I do? The easiest thing is to roll this up a bit, change my break-even point, or to roll here to 30, to have a short straddle and to help me do that. But if this doesn't help, in the end, I can roll this out of time. I could just change this, change the expiration, maybe go out one and collect a bit more credit. You see, we have more credit here, and also roll this up a bit. So you see, we're moving up. So in the end, I don't need to lose anything on that, but MenthorQ helps me monitor these things. But in the end, I believe that these levels are respected. They bounce back, but MenthorQ helps you tracking this stuff. So in the end, this time is on your side. So if we go back to the trade, and this is the last thing I'm going to show you here. I opened this trade because volatility was high, and it's going to drop a bit. Let's say it drops a bit. So you can see we regress towards more normal conditions, and we go back here with the expected here 30 max. Now here on the 30. So even here, we would have $50 in win. So was probably close around here. So volatility drops a bit, and we respect the level. We go back there. We are in good profit. If not, profit is not basically. If we were here, I wouldn't have a problem even taking that loss. But most probably before this happens, I would roll up a bit the 25 to get a bit more extra credit. And in the end, if I see, let's say, if we were here somewhere stuck here, and we would be in a loss of 50 to 60%, most probably I would just roll the all out of time and either leave this to or worthless. That would be one way, and open another put in the next circle if this makes sense, or basically just roll them both to the next circle and collect more credit. This definitely lowers your basically your win. But if you know how to adjust your risk and nothing really bad happens, in the end, this is a strategy which can give you very consistent profits. And the good thing is things tend to go like I showed you in the bell curve, they tend to go back to the middle, but the option scores, MenthorQ gives you, help you manage these trades, set up these trades, and basically find good trades. That's the thing. So yeah, like you saw here, no? We have the call resistance at 30.27. So I wouldn't wonder if we go back there. But along with this scorecard here, the key levels, if you monitor them, you know, do I have to adjust my trade or not? So that's simple. Very simple trades.
Awesome. Thank you, Dan. So again, we're going to be back with Dan very soon in the next couple of weeks. We showed you some ideas on how to use the data. We showed you how to implement the trade. So I think this was an awesome session. If you guys want to learn more about MenthorQ, just come to our website. And if you want to send us an email, if you have more information, feedback on what you would like to see next during our live, please send us an email as well. And for now, like, I thank you, Dan. And we are going to be back live today for twice. We're going to be back at 11 with Anne-Marie Bain from Top Step X, and we're going to be back at 12:30 with Ryan for more like advanced strategies with volatility. So don't miss it. Stay tuned. We'll be back live on X and our YouTube channel. And for now, thank you, Dan, and see you very soon.
Yep. Thank you, guys, and have a nice day. Bye-bye.